Morning, Steve Free in Chicago with the morning grain comments. Kind of mixed trade overnight with beans about unchanged, corn down a penny, wheat down about 3 cents. Outside markets, you've got the dollar rallying a little bit on some U.S. payroll data. You've got crude oil up again, and you've got gold up again. So U.S. stocks could open up a little easier, and we're just kind of watching some of the China trade data that came out that was not as good as expected. Over the grains, Friday we had a weak close in the beans. I think the market was looking for maybe some harvest movement out of South America. So far we haven't really seen that, but the market is waiting for that movement to eventually push prices lower from this area that we're at and maybe test contract lows. Over the corn, we're kind of stuck in a pretty tight trading range. If we break the market, we don't buy corn from the farmers. If we rally, we buy too much. Export price-wise, we're a little competitive, close to Ukraine prices, but the Ukraine situation kind of leaves things up in the air as to what is going to happen to not only their export pace, but their crops. But right now, we might be losing a little bit of business in the corn market because of cheaper global prices. As far as the wheat is concerned, we've seen a bounce in wheat prices because Egypt decided that they might use some of our credit to buy some of our wheat crop prospects. We'll be watching those pretty closely as the crop slowly comes out of dormancy here in the United States. We're not expected to have any problems with that, but we'll be watching that pretty closely. On Friday, I asked our weather guy about all the moisture that we're seeing on the West Coast and the cold and snow that we're seeing on the East Coast, and the fact in the middle that we're kind of drier than normal. He said that, again, his forecast for this summer is that especially, let's say, Iowa East, conditions should be favorable for crops. We also should see favorable conditions in the southern part of the United States. His hot spot is the Dakotas, Montana, and Canada for this summer. He does watch very closely the possibility of that hot spot growing a little bit into the western corn belt. So his key is that once we get into the spring, if we see normal rains, we'll have a normal year. If it's drier than normal, we could see a drier than normal summer for the western corn belt. So it's weather time again for the Midwest, and we'll start trading that a little bit. Saw a lot of activity last week in the funds. They reduced their longs in corn. They also added to some of their shorts in wheat and soybean oil and added a few beans. The corn movement was some of the biggest that we've seen in years in liquidating their corn long positions. So the market thinks that beans should go lower because of the big South American crop, and that corn and wheat's in a trading range until we know more about 2015 crops. On Tuesday, tomorrow, we got a USDA report. Should not be a big event. It shouldn't make a lot of changes in U.S. or global supply and demand. But when the numbers come out, we'll give you an update on it and see how the market reacts to it. As always, these are my thoughts, not those of ADM or ADM Investor Services, and have a safe and profitable trading day.